Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Friday, August the 30th, the year 2019. Let's talk trading, weekly wrap up. I should probably add monthly wrap up to the trading screen since we are at the end of August. So for this month, I know each and every one of you have used your risk management on each and every trade. I probably don't have to repeat it, but I do have to repeat it, right? Okay, just so you know, boys and girls, fellow traders, these videos are for educational purposes only. Your results may differ from mine, and Forex trading, as all trading, is very, very, very risky. You can lose all your money. So seek your advice from an accredited financial professional. So when they lose it, it was lost by somebody who was accredited, right? Okay, here we go for the week. If you're just tuning in, all the gaps filled. And if you're just tuning in and you didn't take advantage of some of those weekly gap opens, you really missed out. Okay, fellow traders, there's something I've been thinking about, and in fact, I'm trying to find an indicator that I modified. It was something I did years ago. But we're talking about the price movement, and in this case, the Euro AUD. But I want to show you something here on the chart. You see, we've got the Euro pairs here with the, do we have any exceptions? No. All the Euro pairs are right here. Well, you can look and see, for the day, they're pretty much all red, right? What's that tell you? Tells you the Euro's pretty much going down. Obvious, right? But see, a lot of times when you trade one pair, you focus in on that and you forget about, these are currency pairs. So how is the euro doing in relation to the other currencies? Now, if you remember, we picked to go short on the euro AUD based on the fact that the overnight swap pays the most if you're short and takes the most if you're long. So that's the reason why. And it pretty much paid off here during the week because you see we escaped the wick zone, the upper wick zone here the previous week. It also failed to make a new high on the weekly. You see here when it dropped below this point right about here, that's about time we were looking to start taking profit. But also, you look here, there was this other high. You see it failed to reach that high too. So when it started coming down and scraped through that, that was the time to just say, okay, let's go short. And if you sat there for the week, you were probably up over a couple hundred pips. Not bad. And for the year, we're up. For the month, we're up. But for the day and week, we are down. And you see here we opened below the previous day's midpoint, shot up through it, and came back below. And you see we broke, here's the opening range for Monday, right here, first trading day of the week, that open range. And you see we just broke, and now we've broken into the range of the first day of the year. And then here we touch the range of the first day of the month. But we're still above the opens for the last 12 months. And once again, you see here, we actually are now inside the range of the first day of the year. And you also see we put in a one ball today. Now, inside bar traders, were you not rewarded there was a little break to the upside and a huge break to the downside. And I think there's a couple of inside bar traders out there watching my videos. So I would imagine if you traded this pair, you've got big smiles on your faces. And looking at the range, we've got 5 over 100. And if you notice, 4 of them are euro pairs. Now this is interesting. The new beast is only at 94. We entered the upper wick zone here the previous day. We fell out and went right through the lower wick zone and out the low. So once again, a nice trade for those trading the simple horizontal lines. It's funny, I got this email and it was saying how hard it is to be different. And as you know, as you probably watch other traders' videos and you look at their blogs and websites and all the ads you get in your inbox, you know almost all those charts have squiggly lines on it or some kind of something to catch your eye. They call it eye candy. You know, we've got simple eye candy here. It's not really eye candy. We put in the lowest H1 open here this hour. You can see we've already moved up a couple of pips. But, you know, just trading this simple stuff, these simple horizontal lines, it's, you know, it's just kind of bucking the system. Because I wonder, it's like, you know, all these guys seem to talk about each other, but you don't really hear any of those big guys mention me. I guess because they, I don't speak, you know, their speak. So for a bunch of guys who want to promote squigglies, you don't want a horizontal line dude coming in there. That's for sure. And speaking of horizontal lines, the buy zone pivot just above the buy zone. No real bias there. So you just take the trades as you see them, and as you can see, these buy zone trades paid off. About the only one I see that may have triggered a loss would have been, actually, this, you would have been green in the short zone, so that shouldn't have been a loss either, because you would have gotten short here or possibly here, and you could have taken profit somewhere down here. Okay, rat zone. Let's put this back to M15. And I guess as we wait for the chart to load up, there's some people, I think they still might not understand the rat zone. They're thinking this is where you go long, and the answer is that's the last place to go long. You see, really, you go long somewhere down in here. So you see here, even with M15, you got a red candle closes, green candle closes, and then you would go long at the high there. So you would have been long at 28, and so you'd already be up about, what, 5 pips. So that's how that works. So whether you use M15, M5, or you can even use H1, but that was just explaining a rat reversal. Here, you could have taken the holo trade as we just saw, and you'd still be within the rat parameters. So it's just a very simple trade based off of statistics, which I think I went through pretty well yesterday, but let me know if you need me to do that again. Now, next month, I'm not sure if I'm going to stick with a new pair for the whole month, go back to maybe one of my old favorites. Let me know what you guys would like to see, if you want me to do another new pair or not. Because that was kind of fun going through everything. I think I covered all the bases, how to do the statistical analysis, and how the pair works within the methods that I present. Oh, just so you know, that was the pivot. You see we hit the pivot there. So it looks like we're going to have one missed pivot this month down here at 62.38-ish area right here. And we're only off by, what's this say? 96 pips. We missed it by 18 pips. But still not bad if you were trading pivots. Price action, as I showed you yesterday, if it opens between two lines, chances are it's not going to stay between those two lines. Sometimes it's just going to be a tiny little break, and sometimes you're going to get that Magilla trade. And for those of you who don't know what I mean by Magilla, look up Magilla Gorilla. I guess I show my age sometimes by some of the references I make. And in the wick zone, in and out, in and out, in and out. Once again, simple statistical trade. Horizontal line trade, really nice here. But here you see lower, lower, lower. So it's like this is telling you price wants to go down. You can look at these mid dots here, and you can see price keeps closing below those mid dots. Previous candles mid dots, that is. As far as right now, what's going on at the tick level, you see we got about a 5 pip upward move coming off of that H1 lowest open. Whoops. Okay, and here I still don't have it. I didn't switch it over on this profile either. But the Einstein line, you can see this wouldn't have been a long trigger because this is still set at the wrong. It should have been a little bit higher. But anyway, we would have triggered long here and maybe picked up a pip or two. Okay, just using the TRO-HL5, you can see here's the green rat zone once again. And right here, you can see price was taking out lows, took out all those lows, finally put in a low, and now we're going to see if price going to take out a higher low. Because remember, price is either going to retrace off a higher low or it's going to make a new one. So looking at the past highs and lows that price hasn't taken out, you can see which way price is moving. So it's taking it out. It didn't take it out, so it must be going the other way. But then it could reverse and start taking out lows again. Oh, and I guess you probably want to know, whoops, what indicator this is. It's the infamous TRO-HL5. But how that works is we're showing highs and lows, but we're only showing those that have not been crisscrossed. So if you set that to true, then any high or low that's been crisscrossed doesn't get plotted, only the ones that haven't been. So you can see here, this high and low from the previous candle hasn't been crisscrossed. And you can see we're down from all the session opens. Once again, using the ATR range, here's the daily in light brown. Price went in and came out. Once again, another reversal trade out of that ATR zone. And the weekly buy zone, which is basically the same as the first day of the week buy zone, you can see what happened. So, fellow traders, that wraps up a month of trading the EUR, AUD, or Euro Aussie. I hope you enjoyed it. I had fun. I hope you were profitable. Just remember, it's not what you trade, it's how you trade it. Have a safe weekend. When you come back next week, Let's drain the banks all next month.